Hello, everyone. Welcome to Smart Investing. Today is May 22nd, 2022, Sunday. It is 10:36 p.m. And today we're going to be doing the video on the banking sector. We're going to be doing the next 5 stocks. These are the next 5 stocks. So I checked out Webull actually earlier for like a few hours, maybe an hour or two, and basically they updated the app. And I think this is the third update that I've seen. Like the total platform where you could see like the menu and the navigation, like where everything's uh noticeably different. And the first update, when I first started the app, it was great. I like the ranking system. The second is okay. I thought they kind of downgraded. Um, this third update, I actually think it's pretty good. Um, it's something not new to me, but it's very new to a lot of other people. So I'm sure that a lot of people are gonna find it very insightful and informative. It's gonna be very helpful as well. Again, I know that people might not understand it at first. I like right off the bat, I've been doing that for years. And what I'm talking about is the quant analysis. And then basically, the quant analysis is divided into 5 categories. It's divided into value, income, growth. I like to use a blend as well. And then also, I forgot the fifth one. But those are actually also, and momentum. But those are actually different strategies you use because, uh, again, they're meant for fundamentals and technicals. So, when you use technicals and fundamentals, those are just different strategies. One is short term and then the other one's long term. So at first it might seem easy, but actually it's really not. So let's just jump right into the app and I'll show you guys exactly what I'm talking about. So basically, real quick, an update on the markets. The markets are down 18% all across the board, all 3 major indexes, at least a minimum of 18%. So we still have about 2% left to consider the stock market a bear market. It's definitely gonna reach a bear market sooner or later. So we're coming up into pretty much this last week of May to end it off pretty negative. I thought definitely we hit a bear market already, but I guess people keep trying to push the stock up for some reason. Every last minute, like before close, I don't know why. When people are gonna lose money anyway, yeah, you can try to get a quick trade, or whether you're doing this for the long term, it makes no sense to do that because you're just pretty much guessing. Every time the stock market tries to close in the last 10 minutes and then you buy, then all of a sudden it goes up. The last hour to the last minute, of the day before closing. And what I'm saying is that's not really a good strategy for long term. For short term, you can try to get away with it, but you can only do it so much where, when it comes to closing time, uh, anything can happen. And it's just totally different. at closing time because it's just less movement. You know, when the markets close, they're closed. There's not as much action as you think there is. Maybe the first few minutes because people put in their orders, even limit orders. But other than that, yeah, you're not gonna expect much from the market after it's closed. So let's jump right into the five stocks that I have. Again, these are five banking stocks. So from now on, I think I'm gonna start getting on the Webull community, even though they updated the app. The reason I'm saying this is, and this is the first time I think I'm gonna actively start doing it again. I remember back in 20, every year I try to check maybe once or twice to see how the community is, because these past 4 years that I've seen, honestly, this is, I'm sorry to say, there are a lot of beginner investors on Webull. It's like the platform is really good, but the people that use it, they're very very uh not experienced. They're pretty dumb, to be honest. And the reason I say that is because um everybody wants to act like they're smart, act like they know what they're talking about. Everybody wants to mention price points and buy this, buy that. Everybody mentions like the crappiest stocks that are not even worth like $10 or more. Everybody wants to get rich quick. And then when I look at pictures of charts, I've come a long way as to my charting. So I don't give away my charting techniques or my software that I use or anything. So I don't give away my secrets for that. But even in general, I seen charting the way they have it as in like their indicators and like everything like it's just awful. It looks so awful even in the pictures um when they post charting. And again, I'll say this: when you're doing charting and you take pictures or whatever, or even when you're highlighting something or whatever snapshot that you do, I'll say this: it's easy to take a picture before the market is open and after the market is open, because anyone can do that. Anyone can tell you this is the low and this is the high based off a picture when the market is closed. But when it's live, guys, trust me, it's a whole new ball game. It is not the same as saying, this is where um this is a good price point and this is a time to get in, and then this is a time to get out. Nobody's really gonna teach you that. And then trust me, there are a lot of scams out there that's saying, like, I made like 3,000% in a week and this and that. I made hundreds of thousands of dollars, and it's just a bunch of scams, and people just want to feel like self appreciated. And again, I could smell just lies from a mile away because I've been doing this for years. And this is why I don't listen to anybody. This is why I only depend on my own research. I think every year I just try to sniff out what's true and what's BS. And I think this is why I'm so good at what I do, because I can differentiate that. I already know what's true and what's false. And then also, I already know who to listen to, who not to listen to, and what's valid information and what's not. So I just want to say this before I even start making the video. I'm not gonna leave a comment on stocks, but I think you can try to. Uh, I don't know how long of a comment I can make, but I can actually tag other people on Webull in comments and all that, and I can put hashtags and everything. I mean, I know it could be done before, but now they've done it to a point where uh Webull actually uh they encourage it, because back then it was to a point where they weren't monitoring any comments or anything. So now they've gotten rid of a lot of people that have broken the rules, which is good. And that's what I've been waiting for. So, 4 years later, it's about time that they got rid of, crappy investors, to be honest, because um, when you have, you know, unofficial people trying to give advice and other people trying to act like they know what they're talking about and they're making millions when they're really not, and it's just a pipe dream, as they call it. And then basically they just trying to hype everything up, and it's not about that. You can just tell who's official and who's not official, um, based on what a person can do. And I'm not really like that, so hopefully I get more attention on Weeble, and hopefully more subs and all that and followers on my YouTube, so that way this channel can grow. Again, I've been doing this for years and years, and I've been doing this under 10 years, but more than 5. I can't even remember how long. I think I've been doing this maybe 7, 8 years about. So um, hopefully I can get some recognition on this community, which is I don't like the community on Weibo. I haven't liked it for like I said, the last 4 years, but hopefully now that we're in a down market, Weibo has cut off a lot of people, and maybe it is smart to actually listen to the right people during a down market. And it's easy to do and say and make comments on a down market, but when on a uptrending market, in a bull market, but when a stock's going down across the board, all over major indexes, it's hard to make money for that. So I just want to make a quick update, and I'll show you the platform. So I'm pretty excited. I'm tired but excited at the same time, because I like the new update. I love it. Comparing it to the first update, I can't say it's better, but it's similar to the first. The original uh, software update that they had. Very similar, but it's just the information is different. So they just have different information set up. So again, I do like the ranking system that they had before in this third update. So hopefully this third update can stay here for many years. And even if not, hopefully one day you can choose which update for the UI and the navigation system on here. Hopefully we can choose an option as to how we like, those updates to use when we're, discovering and looking at Webull for our usefulness and in informative purposes. So let's begin with the banking sector. I have 5 stocks here. So the first one up, I might have gone through this again. I know I cover many stocks. I might go through them again. But again, this is a different variation. This is a different time. I might have gone over this maybe last month. But again, this is a new week and a new month. So hopefully things have gotten updated, and you will see me start commenting in the Webull app here in these videos. So let's begin. We have here MVBF. So a lot of info. I'm still new and learning the app. So we're gonna see here. For this stock, it looks like it has only 820 followers. The ranking system is like not even working properly at the moment. So we're gonna click on it. We're gonna click on everything and see how this is going. So I can't click on anything. I could click here, but I don't want to. I can click here, but I don't want to. So we're just gonna keep moving with that. So let's look at the first page. Not much has changed with the first page. From the numbers, I like them. Again, I can't say too much now that I'm using Weibo, and I guess they're being real strict, so uh, I need to watch what I say and what I do as well. So here we go. We have the 5-year, and it looks like it's been holding up pretty good. MVBF. Uh, let's go down to that. So not much to look at there. The news neither. So let's look at the feeds. So with our feed, again, a lot of these stocks are not updated when it comes to the ranking system. Again, it needs time to adjust to the ranking system and to place it in ranks. And again, you can make predictions as to you think it's going to be bullish or bearish. I've seen that since day one of the app. So that is nothing new to the app where you think it's going to go up and down. We're in a downtrending market. So there's not much to really say on that front to say if it's going to go up or down. So the page that I'm talking about is this page, the analysis page. As we can see here, this is definitely brand new. This page here, this is definitely interesting, and I'm sure many people will find this interesting. But I will say this. I do like it. I love it actually, and I've used it for many years before they even have put this on here, the quant rating. But what I see wrong with this is that I agree with the names of the categories, but some of these scores, honestly, I think some of it is inaccurate. I wouldn't really agree with it. I'm not saying for this stock. I mean, in general, it could be for almost any stock. So this is why I'd love to go over it and just give it my own rating and actually do it myself. Because when this happens, you can actually think, what is the stock good for? So we're going to scroll down to the technicals a little bit. So we have here, it says related indicators. I don't know why it says that. So if you follow me, I'm looking at this here. Then it has price to earnings, earnings yield, EPS growth. So let's look at the quant ratings. So basically, the highest score for this was income. So it came up with 5.99. I'll say this. Really, you really don't have 5. Well, you could have really 4, maybe 5. Because I'll tell you this. Well, you kind of do have 5, but my 5 are different. Quality and income go hand in hand. Growth and momentum are the ones that go hand in hand. So what I'm saying is, these two are pretty much the same thing. These two are pretty much the same thing, the same category. This, on the other hand, is different. This is value actually has to do with pricing. So basically, the higher the number for value, it's telling you you're getting it at a better price. The lower the number, it's telling you that, you're getting it at a higher price. I've done this plenty of times in my videos. I've go off of the PE rating. And I say it plenty of times ever since day one. Usually for any company, a 15 PE, depending on the category in the company, but in general, most of the time, a 15 PE, I'd say between 12 and 18. That's usually fair value, but 15 is the sweet spot. If you're under 12, then that's a undervalued stock, meaning you're getting it at a big discount. So automatically, right under, it's under 15. It's a pretty fair value. When it's under 12, it's usually a really good value. So when it's a little bit over 15, you're slightly paying a little bit more. When it's over 18, it's highly valued, overvalued. So again, when it comes to momentum and growth, that's more short term. That's more like for trading. And don't get me wrong, there are some mega cap stocks that can still beat all of these. You can still have one stock that can still provide all of that: income, quality, momentum, value, and growth. And a lot of that happened in 2020 all the way to 2021. Again, for example, the FANG stocks, a bunch of those FANG stocks, even the dividend paying ones, the only ones I could think of, let me see, Apple. I think that's the only dividend paying one. But again, you had many companies that were dividend paying companies. They grew like crazy. And, it's because of the helicopter money from the Fed and all that, the government, and low interest rates. And, but now, like I said, I've been bearish since 2020. So we're in a whole new ball game. So again, I just do not agree with the ratings, and I'm gonna tell you that from today, since day one of this new updated version of this app, um, I'm gonna disagree with a lot of their ratings. Again, I do agree with their names and the categories, and like I said a few minutes ago, these two go hand in hand, and they're pretty much the same category, and these two are pretty much the same category. Again, you can still have a blend of both of them. You can still have a blend of quality and growth. And then you can still have, again, some value into one stock. So for the overall rating, they rated it weak. And I don't use numbers, I use letters from A to F. So I think that's what I'm gonna do to differentiate myself, so people won't get confused. And it's just a easier uh, rating scale to look at and understand as well. Just something a little different. So we have here. Uh, I wouldn't even look at this because with these indicators, you can see this when you analyze the company anyway. So, just looking at that, it's it's hard to look at that information when you don't have everything in front of you. This is just partial information, so not a lot of people are gonna understand that. So then we have technical analysis. They have short, medium, and long, which is pretty cool. And then they have daily, and then they have weekly. I think I'm gonna start using weekly just because it makes more sense. And then as for volume, I don't even use it. And this I find pretty cool. This I do like, where they like to compare different indicators as to thinking about it as either bullish or bearish. using those different indicators. So they came up with a MACD bearish trend here. Hold up, let me move. Oh, I didn't mean to take a picture of that. I'm sorry, guys. I meant to. So that's what I meant to do there. So I apologize for that. So as you can see here, this is not advice. This is just for informative purposes. So we can see here that on 5/6, they received a bearish confirmation from the MACD, and I've used MACD before. So as you can see there, they're pretty much giving you the information for free. They're showing I can't believe how good Webull is, and not a lot of people know how to use indicators and stuff like that. And what's pretty cool is that there are different indicators that I've never even used before, like this inside bar. This inside bar here, they used it. They counted it as bearish. And as you can see here, look how big that candlestick is. And then also, this candle did not, well, barely close within those support and resistance levels. And as you can see here, that was bearish. And then even if you extend the line, even if you extend that line, you can see here, yeah, it's broken up. It broke up past that line right there. But then that move, it broke down again. So what I'm trying to say is, you have more candles down here than up here. So that's definitely a bearish trend. And I've been saying that before, that, based on the technical analysis, I see a lot of dead cat bounces. Now, if you don't know what that means and you don't know what that is, it's basically when the stock gets pumped high for a little bit until it actually goes down much lower than what it originally is. So let's say a stock goes up like this, for example. I'm going to point this one out. So we have here, right here. So we have here this line, right? And just that line, you don't even need the other line. So we see here, this candle has closed above that line. Then this candle has closed above that line as well. But you can see clearly you only have half a bar for that whole line. You see? So basically that red candles like this, candles like that. So basically what I'm saying is, if you were to divide this bar in half, it's basically half the bar. It's basically half the bar, if you guys can see that. So I'm going to draw it again. It's half the bar. It's only half the bar. Well, sorry, it's hard to... Well, basically, again, it's like half the bar. So then we have two events that say bearish and one says bullish. For the medium term, The input parameters for the indicator KSA will be reset if you check. That's fine. Medium term. I don't like that one. KST. KST has crossed. I don't use that. I like how it's showing me the two lines. And then this is what I like though. The MACD. I've used the MACD before. So again, as we can see here again, so basically this is what I see. So we have that line. And again, we have more candles going down. What was the lowest candle so far? It's this one. So basically, ever since January, it's going to new lows. Yes, it's broken highs, but again, you can see more candles and red candles going down. So yes, this has gone up, but as you can see here, it's starting to go down again. And these are all red. Look at these last 5 candles here. You have one. You have one here. 2. You have number 3 here. Then you have 4. And then 5. So out of the 5, 4 of them are red. And look how big. Look how big those candles closed. Look how big these candles have been closing. I mean, yeah, you have a few green ones. But again, see it. You can see that trend going down, like trying to reach new lows. That's because it's following the market. So I definitely like the technical side of it. I like the short, medium, and long trend for it. So we have the long term there. So we have the daily, and we have the long. So instead of me showing you on a chart, I think I'm just gonna go to analysis, since this is it's showing me analysis as well. So for the long term, it's showing a long bearish trend. For the medium term, it's showing, that line as well. So you can see exactly what I was talking about. It went up a little bit above the line, but then it's starting to go back down again. And again, you see more red candles. You see more red candles that are bigger than the green ones. I mean, I know it's hard to try to spot that, but you can see that, red two big red candles. That's a pretty big one right there, right there. You have a gap. You have a gap right there. Gap going down. You have a red candle there. Another big one here around earnings, especially. Earnings plays a big role. So, I mean, and then now we're going to look at green. So green there, green there. And that was about it. Those are only the 2 big candles. Everything else you have those pretty big red candles. So, just going with the trend, you see it's mainly red for those big red candles. And that's for the medium term. And then even the short term, I still see more red than green. And I'm talking about big candles. So that's just the majority of it. Short, medium, and long is hard to see. But again, ever since January, so many stocks have gone down. So Just to be on the safe side, you know, it hasn't performed well in any of the major indexes. So, anyways, I'm talking too much, but again, this stock and on the platform is new to me. So, anyways, based on the 52-week high and low, that's only close to like a $10 difference. So, within that $10 range, it has to break lower lows to confirm that it's gonna go lower for sure. That I can say that's a definite answer. As for the financials, again, I love looking at financials. You can click on the latest information there. Yeah, you have the earnings. So not much info for the earnings yet. This looks very well laid out, very presentable, very easy to read and understand. When it comes to the ratios, I don't really like looking at ratios. I like looking at actual percentages and numbers. Again, they've scattered this. They scattered the fundamental page into like the categories, and again, I don't understand why. When you look at a company, you evaluate everything, but you don't separate it into categories. You look at it overall, if it's a good stock or not, and then after that, you analyze based on the information and the numbers that you have, what strategy you're gonna use it for, how long you're gonna use it for, and what is it best for, strategy and time frame. So other than that, you just go over the information, which I always do, and then revenue. It looks nice. I'll have to get used to it, but I don't like looking at the pie chart when it's revenue. I like looking at the bar charts. That was more informative. I think that was a better way of looking at it. For debt as well. You guys know I like to look at that. I wish there was a better way to look at this, but let me go back and see if I can. So yeah, I can. So here we go. I'm just gonna look at it with the dotted chart, which I love the dotted chart. It's just easier and much more simpler than they have it kind of written and stuff. So key indicators, we have ROA. I like looking at the annual. Again, you guys know I like looking at annual. I don't know why it's still giving me quarterly when I'm trying to look for annual. Maybe it froze or something. But anyhow, we're gonna look into net income. So we have net income that's pretty flat for 2020 and 2021. Nothing for total revenue, nothing for operating income. Again, the balance sheet, and we have here at 90% debt. You can see it here at the bottom. That's 90%. So obviously, the stock, like I said, it's in a $10 range. So just with the numbers alone and the evaluation, I'm gonna say no, not to. And I don't have much information anyway. But just the peer ranking system here, which I've always loved. So you can see there, not many high numbers there compared to their peers. You could always look at their peers here, which is pretty good. So we have MVBF compared to all these companies. So we have here the net margins, ROE, dividends per share. We have debt to asset, book value, price to book, dividend yield, and PE. You guys know I love PE, but again, this has to be done individually before it has to be done comparing to their peers. So let's jump into their uh, dividends. See what they're doing with dividends. So it looks like they've been raising the dividends. Actually, each quarter. But again, I'm gonna say no to this company because they look like they're in a downtrend. Doesn't look like Wall Street has much interest in it. That's where the big money is. Again, I don't like the stock. I think there's better banks than this. Again, it's been holding up pretty fine, but who knows? Sooner or later, the stock might break down, and I don't see much upside. Uh, Going for this stock anyway. I mean, again, it might stay flat. I mean, hopefully it does stay flat and it can hold up, and then maybe later on, uh, during maybe next year or towards the end of the year, whatever happens, and maybe it can reach higher highs. But as for now, I don't see this as uh, a A-rated stock. So again, I'm gonna say no to this stock. And again, I just don't have much information on it. So anyways, moving on to the next one. I know I took long because, the updated version that they did on Webull. So next we're going to go to CZWI. Very cheap stock. I don't like the volume. We have a 52-week high and low difference of only about $5. It's awful. Dividend payment of 26 cents. I don't like it. So we're not even going to look at the chart. We're going to look at some feeds. I'm going to comment on the 5 stocks at the end. So we have here from Trading Central, the latest 4 days ago. Actually, not going to look at that, but I see that they did comment, but we're going to look at the analysis. And we're going to look at the quants real quick. So they have it as a momentum. They rated pretty good for value. So meaning the price. So they're saying it's at a good price as of right now. And the momentum is good. We'll see about that right now. The volume looks like crap, to be honest. It is undervalued. I'll give them that. But I just don't see activity on this stock. Now, let's look at the 5 years. You can see it's going down ever since 2022, like many stocks. And then let's look at the 1 year. As you can see, went up. It's gone up ever since February, and then it just dipped down all the way till now. So it doesn't look good. It just doesn't look good at all. And again, that difference between $4, $5 is not much. The volume, again, I could be wrong. We will have to see during the market open. Hopefully, gets attention. Maybe it will get attention. Maybe they're trying to tell us something in the future. Maybe uh, it's going to get attention sooner than later. Maybe they might know something we don't. But for now, I don't see momentum or growth in this stock as of right now or even next month. I hope I'm wrong, but that's what I'm seeing. So again, that's not advice. That's just what I see. Again, and then even on Webull, again, they even tell you, you know, right here, it's not considered as analysis or advice. It's just information purposes. So again, everybody do your own due diligence. So again, the highest that they ranked was momentum. So to me, that's saying it's like pretty much of a growth stock. Or well, the only difference between these two is time. So when you say momentum, it's basically for the short term. When you say growth, it's basically long term. They're the same. Again, they're the same meaning. They're the same result, but just a different time frame. That's all. So growth is long term, and then momentum is short term. That's what people need to understand. So we're gonna look at the short term. Let's see what I can agree with. I'm just gonna say that what I can agree with. So they have a gap up. A gap up is always pretty good. So wow, they have a lot of indicators for the end of May here. They're saying that they're bullish on this stock in the short term for CZWI and one bearish trend. So we have here relative strength index. They said I know what RSI is. I'm trying to see the chart. Trying to see why. Just trying to see why. Trying to click on. I wish I can click on it. So anyways, I can't click on it. I wish I did, but it's showing me that 1 day pattern. It's showing me that it's bullish even though it's going down. I can't really say, to be honest. So in the medium term, let's look at the weekly. Weird how in the short term, when I click on weekly, hold up, what kind of time frame is that? So daily is showing me for the year, and then weekly is showing me for the year. But I don't get it. It's showing me for weekly, it's red indicators, C3 that are bearish. But then for a daily chart, it's showing me bullish on a daily chart. So this is confusing, actually. This is pretty confusing. So then the medium term, weekly is red. Daily, it's a tie. I have one bull and one bear. Again, I don't think this is good and accurate. I think this is more for learning purposes to get an idea as to which indicator you might feel interested in understanding. I think that's what they're trying to do and trying to get you to understand that. Again, um, showing you and telling you, but it's all a matter of which indicator uh, you think it's gonna. Wow, I mean, there's so many good indicators too. Um, it's just a matter of what what to choose from and how to choose from it. Um, Diamond top, I've never heard of that. So for the short term momentum stock, for momentum showing negative. So this is more of a learning curve, like I said, of those indicators. So we're gonna just look at the earnings. They've gone up, so now they're going down. Uh, those indicators, I think I've gone over them before. Gonna look at it annually. If I don't have proper information for annually, I'm not even gonna go over it. I guess not. Not for the key indicators. And then let's see what we have for the income statement. I don't have much for income statement. I guess the information hasn't uploaded correctly or at all. So we have 90% debt and not much. I'm gonna say no to the stock as well. Uh, just because of the range, the price ranges on it, and overall no. So looking at this chart again, so I'm looking at the bottom for the year, not for the year, but before the lowest bottom. So it was about 22. Then we're gonna look at the high at 28. So that's only a $6 difference. So 52-week low and high. So I said 6. And then the 52-week low is actually close to 20. 52-week high 9, 20, close to 29. So a $9 difference. That's not much. Earnings look pretty decent, but I'm still gonna look at the first page. Look, showing me it's undervalued, but it's not active as a stock. Again, people might love that yield at 4.4, but again, to each their own. Just because a high yield is nice for a stock doesn't mean the company's good. So we're gonna look at analysis. So what did they rank high in? So the highest number that I see is value, basically price, and I do agree with that. It is priced pretty low, but again, you want to see the other factors as well. So is this good for quality, income? Sorry, is this good for, yeah, is it good for quality stock? And does it have income? Or is it a growth stock? And again, the time frame. And then on top of that, again, what rating? And again, it could be a blend of both. It could be a quality stock that has growth and momentum. Maybe good short term and long term. Just have to jump into the stock and see how it is. So the learning curve. So we have here 4 that are bullish, 2 that are bearish. Um, That looks more like an analyst technical rating. Well, not really, but these are different indicators that are technical, but then they're saying 4 bullish and 2 bearish. When I know the stock market is in a bearish trend right now, I just don't know how and why these ratings are getting chosen like this. Uh, but I'm gonna mark it as inaccurate. Again, you still want to do your own due diligence. Again, it's again what I'm saying is this is more of a learning curve. It's not to be taken as advice or recommendations. So we're gonna jump into the company. Again, I think I have a better analysis just based on moving averages. You can always use moving averages. So they've dipped down a lot for their earnings. I mean, if you see that, around here, it's like a flat point, but this right here, that's pretty awful. That's a really big dip on the earnings for Q1 2022, which is pretty common now. So we do have annual estimates, so we're going to jump right into that. So we have ROA 1.3, that's pretty low. That's not bad. So we have pretty decent returns so far. Well, from what it says, but I don't see it based on the 52-week high and low. I still need to see those ranges be broken, especially to higher highs. But again, I don't think that's going to happen this year. Net income and revenue. Nothing for revenue. Only net income. Net income has grown. So again, I'm just getting partial information. I'm not getting the full information when it comes to the overall stock. So we have here the operating cash flow. We have that. So they do have cash flow from what I'm seeing. And then the peer comparison, we're going to save that for another time. Let's just see if they're going to pay dividends. And it looks like they are paying dividends and raising dividends. When was the last time they did a split? They have not done a split. So this is BSRR. And those are the numbers for that. Again, I'm not fond of their technical analysis. It's okay. I mean, I like it because you can learn from it. But which indicator and which signal can you trust? That's the question. I have my own indicators and my own thing, but still, there's just so many indicators to choose from. Which one's accurate? And then also the time frame, like I said, you saw the difference between a weekly versus a daily. So you saw even 3 different outcomes when it came to the long term, short term, and medium term. And these are 2 different time frames as well. When you looked at the technical patterns and the time frames, such as the weekly versus the daily, and then stretching out again, like I said, for future potential on the upside or downside, or if it's neutral. And then again, you saw it for short term. It was just so random, It was like good for the upside on the short term, but then down for the long term and medium term. So the volume needs to pick up a lot, way more than that. And that's all I can say for that. I don't see it going anywhere, so I'm going to say no to that stock. So we have 2 left. Next one is AMNB. So we have here, well, I'm close up to an hour, so I apologize for that. 52-week high and low. Okay, so undervalued, dividend yield, yeah, they can cover it with the earnings. They can cover their dividend payments. This stock hasn't dropped like a rock yet. It's still holding up. So 52-week high and low of about $12. That's pretty fair. It's broken that $10 range. Typically, what I've seen for banks and almost any stocks thus far. So we have to keep it above pretty much $34 is the breaking point. So it is reaching the breaking point because it's at 34.56 as of right now. Again, you see these ranking systems with popularity. They're inaccurate as of now because of the newly updated version on the platform. So you're going to see a lot of stocks that rank number 62 in popularity. Again, they're probably all tied for the same thing, and they probably only got the top 50, and then so many companies are tied with the same ranking score. So let's see, for the quant rating, we have the highest momentum, which is at 7. And let's see if I can agree with that based on the chart. So short term, medium term, long term shows that it's going down. Then we have the weekly chart, short term, medium term, long term going down. So overall, it says that it's going down. I'm not surprised. So we're gonna look at the company. So we have a slight dip, but the estimates are still there. You see here, that's a really big dip, but the estimates are still close to each other, so they still have a chance to beat those earnings. And then we have here the other indicators. We're gonna see if they have it annual. So pretty much gonna have to look at this another time. I don't have net margins, which would have been very important. So we have 89%. So they have strong cash flow. And then they have decent numbers when it comes to their peers. Compared to their peers, they have decent numbers. They rank number 9. They're tied for 9th, actually. So many people are number 9 for their net margins. So ROE, they rank 86. So they will have to rank 51 or higher in order to be in the top 10%. And let's see if they rank 51 in any of those. So for net margins, they rank pretty high. Then they're close to their price book. So in order for dividend yield, they rank close to 51. So I'll give them that. And then for price book, I guess they're ranking pretty good. So we're gonna see their dividends. They do have rising dividends, but again, not consistent. At 27 cents. What was the last time they had a raise? So from 2019 all the way to 2021. So that's a 2-year gap of getting a raise for the dividend, and then the last split was in 1999. So that's still pretty good. We have banks. Last one up, OSBC, Old Second Bancorp. So pretty flat. It's not bad. It looks pretty active. That's good. They can cover the dividend. And then let's see for the 52-week high and low. So it's only a $4 difference, as we can see here. And then you see these spikes here. It's gone up, then gone down, then pretty much gone up. And they're slightly starting to go down. I don't know, it's hard to say. I do like the chart because it hasn't completely broken. But the thing about this stock is that since the numbers are so low, it can just quickly go flat, you know? It can just quickly go flat. Because we have here, like right here, I'd say about 1340 is pretty flat. And we're already at 1394. So again, with that number, 50 cents is not a long way down. So what I'm saying is, I wish I could say yes, but I'm gonna say no. It's too close to the flat line. What I think is, resistance. The support and the resistance. So right there, and then so 1340 to 1395. That's where my numbers are. So what rank did they give them? So they ranked them a 7.72 for momentum. And this chart is just an up and down chart. Can I agree with the analysis there? No, because I'm doing it on my page. So anyways, on momentum, so that's telling me short term. I'm not sure, to be honest, guys. I'm not sure. Let me go a little bit further. And again, I need to see this stock when it's open during market hours. So we have, wow. So we have a raise from 1 penny to 5 cents in 2021. But have they given any raises before that in the years prior? And no, it's been sitting at a penny for a long time. So this is a stock that's not consistent at all when it comes to dividends. They just happen to give it out that year. Last year in 2021, I guess they did really good. They had a hell of a year, good year for that stock. But I'm going to say no because of those splits and the raise. But then again, they're recommending it as a momentum play, so a short-term play. Again, I'll have to see it at open for the market. And again, it would have to break new highs for it to be interesting. It would have to go up to like $16. So this would have to go at least $2 more. At least $2 more. I don't see that happening. I could be wrong. I hope I'm wrong, but that's what my guesstimate is. So again, that's all I have for you guys for these stocks. I'm gonna throw some comments in sooner or later this week for these stocks. Hopefully I don't forget. But again, I'm going to bed. I gotta go to work tomorrow. Thank you guys for watching. I'll see you guys in the next one.